Ladies and gentlemen, 420. I guess this is a day that some of you that are listening to this are probably stoned. But for those of you that are or aren't, I have a topic today I wanted to get into that is really important. And so I want to break down some basics for people that might not be aware of what you're missing out on. And for those of you that are not qualified for the area that I'm going to be breaking down, it's an area that you can stretch your goals and make this a part of your vision for yourself at some point. There's a lot of you that I think are probably on the borderline of this area. What I'm getting at is being an accredited investor and investing in private placements and talking about the benefit of warrants. And part of the reason I don't talk about this very often, and you'll find that I'm just very direct about like a deal. If a deal comes up, here are the terms, here's why I like it, here's the situation. That's because I was a stockbroker for 16 years. 8 years of that, I was exclusively working with high net worth individuals and institutions on alternative investments, which meant private placements, private equity, venture capital, hedge funds, oil and gas, partnerships, everything you needed to be an accredited individual. And so when I started to work with investors in this area, early on, I basically said to myself, look, I'm not going to be the guy who goes out and holds seminars with, widows and orphans trying to convince them to invest in private placements if they haven't done them before. I like to deal with more sophisticated investors in general with this stuff because they know what they're getting into. They understand all of the risks, they understand how it works, and it's just easier. But that said, we all had to learn sometime. So this is what I wanted to shoot this video for, is for those of you that might not be familiar with the intricacies here, and it's really simple. And I think that there's probably a handful or two or three of you that are listening to this, that this could be life-changing for you, or at least have a massive impact on the amount of money that you could make in the market if you end up getting involved in these, whether it's with us or somebody else in the future. Because I'm going to give you some really concrete examples of why it's just really foolish not to invest in a private placement if you qualify to do so, versus just buying one of these ideas in the open market and not getting the warrants. It doesn't make any sense, particularly, and the only reason it would make sense just to go in the open market is that you were a trader and you did not want any sort of a lockup whatsoever. But if you're a longer term investor, like we primarily are, then it makes no sense. So what is an accredited investor? I think this makes it sound like you have to be certified or have a degree or something, but it's not the case. All it means is that you either have an income of $200,000 per year for the last 2 years with a reasonable expectation of that to continue, or you have a $300,000 combined income with your spouse, or you have $1 million in assets minus your primary residence. So if you have $1 million stock portfolio, and that could include your IRA or RSP or whatever it is, retirement accounts, real estate outside of your primary residence, bonds, stocks, cash, gold, whatever, you add all that up, and if it's $1 million, you're good. You're good. The reason they have this, why you have to be an accredited investor to invest in this stuff, is because it's risky. When you're doing private placements, especially in private companies, there's no liquidity. Even when we're doing it on the Toronto Venture Exchange or on the OTC market in the US, these are young companies. They're in high risk areas. The ones that we do are usually very high risk because most of them are exploration companies. And, they don't have any revenue, so they have to continue to raise money. And so the legalities of this it's there to protect investors, to basically say, look, you need to understand that this is not a get rich quick scheme. You should not put all of your money into something like this. You really just shouldn't put what you can't afford to lose in these opportunities. I think that goes for the stocks too. I mean, like say you take a Gungnir, a Bravada, a Timberline, all these different Southern Silver, things like this. And you buy them in the open market, you really should have the same mentality, I think. If you're a long-term investor and you're not saying to yourself, if it goes down X%, I'm out to cut my losses, then you should have only money in there that you can continue to live your life and afford your lifestyle if you lose all your dough. So getting that out of the way, what is really important is saying, look, this whole area is risky. I mean, so I have no qualms about saying, if somebody invests in a private company or has with me, I mean, we've done deals with, I got involved in, for example, LinkedIn and Facebook when they were still private. We bought stock directly from employees and early investors and then put it into a fund, and we were all able to put in smaller amounts instead of buying like millions of dollars worth of stock. LinkedIn, we were buying it at, I remember it was like $20 a share. 8 months later, it was public at $85. So stuff like that, there's different levels of risk with private companies, but in the private company, unless the deal goes public or is bought out, I always tell people you just own a very expensive piece of paper, whether you put in 100 grand or whatever, because you have to get liquidity. The good thing about doing them in the stock market, in the junior miners, for example, the resource companies, is there is some liquidity. You have to be careful if you're going to put $1 million into Gungnir. It's hard to get that money out, especially quickly. You would destroy the market. But a lot of these deals, I have 6 figures in them, and I'm not worried about selling them because I'm looking at selling them in a better environment in a better market with more liquidity. But there's some that I've had to sell, when I didn't really necessarily want to. Could have been I had a recent tax bill, or the company wasn't working out as I expected, and so I start to feed it out in the market without destroying it. But I have bigger positions than most, so a lot of times, like the minimums on these is around 20 grand Canadian. Maybe it's 15. Sometimes we do. Used to be higher, so it's pretty accessible. There are even deals where we will take like $10,000 or $15,000 US. So this is pretty affordable. A lot of you take those type of positions in the market, but let's just get down to what this is. Why would you do a private placement versus buying a stock in the open market? I'm going to use an example of Southern Silver, okay? SSV. First of all, what is a warrant? A warrant, it's very simple. It's a long-term option to buy stock at a specified price. So in the case of Southern Silver, this is going back almost 2 years ago now. I just want to use this example to show you the type of material gain you can have above and beyond just owning the stock if you were to own the unit, meaning the stock and the warrant in a private placement. One of the benefits of private placements is that usually you get a discount to the market price. Sometimes it's 10%, and sometimes something can get kind of hot. And I mean, we had situations like with this Southern Silver, if I recall, before we actually closed officially, we were up like 150% on our money. So, in that case, it's an absolute no-brainer. You have 150% cushion to get back to break even. What you need to know as well, so here are the other restrictions, if you will. If you invest in a private placement, you have, in the Canadian companies, it's a 4-month lockup. So you can't sell your shares for 4 months. In the US, it's 6 months. So this is a part of doing business with private placements. You just have to realize that there's a short period, it's really a short period of time, but that you can't sell your shares. So you have to wait until they're free trading. So Southern Silver, we went to them and said, look, we really like the deal. Will you take another, $1 million at a dime Canadian and give us a 5-year warrant at 15 cents. So let's just use a small amount of money because I want to make this realistic for a lot of you that may even want to look at this in a marginal way. And if you're a wealthy person, then you can end up just multiplying this by 10 or 20 or whatever you want. And what astounds me though, is I've actually met some very high net worth individuals and fund managers actually that they play in this space and they never do private placements. And I'm like, what are you guys doing? You're buying these long-term anyway. You're not trading them. You're leaving so much money on the table. It's ridiculous. So let's just say that the minimum was only $10,000 Canadian in Southern Silver for this private placement. So what ends up happening in that case is if I say, hey, look, we're going into Southern Silver, do you want to get involved? You email me and say, hey, Eric, I'll take the minimum 100,000 units, 10K Canadian, what do I do? I send an email to the company and say, hey, Jim is good for 10K, please send him the documents and the wiring instructions. What you end up doing in that case is then you deal directly with the company. All I do is I try to work out an allocation that we can get in the deal as a group to make sure that, I can spread the word about it, and then we can end up participating as widely as possible. And also, if I give them an exact, at least minimum number, then I can negotiate a placement. I can get us a discount. I can get us a warrant for a longer period of time. And I can use that leverage by pooling our money together to get good deals in these companies. So that's why it all works that way. But you would get an email from them, their admin, their CEO, whatever. You fill out a subscription document. It's just, who are you? You got to check boxes that say, hey, I make 200 grand a year. This is appropriate for me, blah, blah, blah. You wire 10 grand directly to Southern Silver. Southern Silver, once the placement closes, will end up sending you FedEx, or if you can actually digitally go ahead and process this through your broker in Canada, and they can do all the CompuShare certs digitally if you want, or they'll just FedEx you a share certificate. And then when the 4-month lockup is up, you deposit your stock into the brokerage account. There are some tricks with that because not everybody accepts penny stocks. I can help you with that. It's not a big deal. It's a little bit of a pain in the ass with some paperwork, but I look at it as a cost of doing business and getting this big benefit, which is the warrant. So in the case of that, with Southern Silver, we got a 10-cent unit. The unit included 1 share of stock and 1 warrant at 15 cents, good for 5 years. So that means that any time in a 5-year period, I can buy another 100,000 shares of Southern Silver at 15 cents. So just think about that. So 5 years, and you don't have to do anything with it. You can just let it sit there. If Southern Silver never goes above 15, you don't do anything. What if Southern Silver does what it actually did? I'm going to give you this example. Which is it went to 65 cents in about that 4-month period. I think it came off a little bit after the lockup, but it was still it was high. It was 40, 50, 55 cents. So we were up multiples. I'm going to show you how you can actually exercise your warrant without even coming up with any other money. But what you have to technically do is they give you a warrant document along with your stock. And then when you decide to exercise the warrant, you would fill out the form, just like the subscription document before, when you got into the initial placement that says, I want to exercise my warrant, and you cut them a check or send them a wire for 15,000 Canadian, because the warrant, you have 100,000 units that you did. So 100,000 shares, 100,000 warrants. You end up wiring them to 15K, and they send you another 100,000 shares. It doesn't matter where the stock's trading. The stock could be at $1.50 in the open market, and you say, hey, I'm going to go take advantage of those warrants. So let's look at an example with Southern Silver, okay, where this is a real life example. The stock went to 65 cents. I'm going to use 60 cents as your example of where you would take action and benefit with the warrant. This is just an example, but it was a real example. So if you went into the open market on Southern Silver, and I remember this really clearly actually because it was just such a big success for us, but you had to pay above 10 cents. Frankly, if you were a free member, I think the official recommendation was 14 cents. So you would have had to put up 14 grand minimum to start buying that 100,000 shares, and then it skyrocketed after that. But let's just say you could buy it at 10 cents in the open market, the same price as we got it. So you take your 10K in your TD account or in your E-Trade account or whatever it is, and you end up buying 100,000 shares of Southern Silver, you're on board, all good. The stock goes to 60 cents. Big win. six bagger, you know, your 10K is worth $60,000. So let's look though at the people that were in the placement. We have 10K that's worth 60K because of the stock, but then we also own 100,000 warrants at 15 cents. That's going to be, and then I'm just going to use this in theory with exercising the warrant. That's a baked in additional $45,000 profit on paper that you would have. So instead of being up 50K, you're up $95,000, almost double, because you're up 50 and 45,000, which is the difference between the 15-cent warrant and the 60 cents. It's a lot of money. And I mean, imagine if you're doing this at $100,000 level, that's $500,000 that you're leaving on the table by buying it in the open market and not having the warrant. Now, here's the beauty of it all too. So there's nothing stopping you from selling a quarter of your stock at that point that you bought at a dime at 60 cents with the specific purpose to use that money to send to Southern Silver to buy the shares at 15 cents. So in this case, you only came up with 10 grand initially anyway. You sell a quarter of it, so that's 25,000 shares, right, at 60 cents. That gives you the money to the 15 grand to go ahead and exercise the warrant. After this is all said and done, you own 175,000 warrants, or 1,000 shares, sorry, at 60 cents, okay? So 175,000 times 0.6, we're at $105,000 value in Southern Silver, and you only came up with that 10 grand. So you now have more shares than you almost have twice as many shares as you would have had by buying in the open market. The other really good thing about these warrants is that it allows for mental flexibility and strategic flexibility on when to take profits on your investment and how to take profits. What do I mean by that? I mean that if I have the 100,000 shares and it's at 60 cents, and by that time, with it going up so much, we're getting starry-eyed. I mean, with like a Southern Silver, I still believe it's going to go to a buck, buck and a half, $2. Eventually, it's going to happen when silver heats up. So I don't really want to take my position and sell it, but it's prudent to take some off the table there. If I'm taking it off the table, so what you could have done, here's another way you could have played it with, with the warrant. I mean, you could have done this with your own stock, where you basically sell 10 grand worth, take your principal risk out, or you sell a third of it and take a profit. Take a nice profit, and you doubled your money, and you still have 40K in the 60K. That's all great, and that's probably what somebody should do, but you've got that lesser exposure. But if you've got 100,000 shares plus the additional 100, you can play with that. You can end up staggering it out little pieces. You could end up just keep the stock at different intervals, start to take profits, knowing that you've got warrants at 15 cents. So even if you can take all your risk off up to 60 cents, you can sell the whole boat wherever you really want to, knowing that you've got that free ride at 15 cents in case things go crazy. And that's why I love having the warrants, is because you can use the stock for more of the shorter intermediate term play, and the warrants you sock away for the big hit in silver and gold and mining stocks. And you do it with no principal risk in the deal. So this is one example. I mean, I'll give you a quick rundown. Like we did a placement on Gungnir at 3 cents with a 5-cent warrant. So here's what I did. I did 1 million units. So 30,000 Canadian. I have 1 million shares at 3 cents and another 1 million warrants at a nickel. I mean, so the thing ran to 20 cents then. It's still at 12.5 cents right now. I sold like 50,000 shares of Gungnir when it was the first run up into the high teens I took a little bit of it off, but besides that, I've bought that all back and then some, around a dime. And my plan would be then I'll sell that at least 500,000 shares, somewhere around 20, 25 cents, just to be prudent. And then I will have 1.5 million shares essentially. Whether I use that money to exercise that million warrants or not, I don't know. Maybe I won't. I'll just keep that 500 there with the idea that at some point I need to come up with 50K, which is 5 cents times the 1 million. But at that point, so you've got 500,000 shares at 20 cents, that's $100,000. So I could end up selling half of that and I would be fine. So basically, at the end of the day, I wanted to make this video because it's not that complicated. But what you need to know is that, this is what smart money does. I've got a couple of elite members that get it. I've got a handful probably. What they do and what they've been doing for the last couple of years is they're just building a portfolio of warrants. We have access to all this fantastic deal flow. They get it first. Some deals we only do through elites. Then we may open it up a little bit to the premium members, and then like Arcana right now, which is open, probably until only Monday, it's getting filled up. It's open to free members. You can jump on this thing right now, do your first deal, come in for 20,000 Canadian. You just have to know that, look, you're still buying stock. You just have a lockup of 4 months, and you have to go through a little bit of a different avenue. You send money to the company instead of sending it to your brokerage account first. And then you deposit the stock in your brokerage account later when you can freely trade the shares. And then you have the warrant as an insurance policy and as an upside added incentive. And if there's some of you that want to start this and you need my help with brokers or back end and stuff, once this process, with the free trading and everything comes along, I'm happy to help you. It's nicer if you're a premium member, but I don't care. It's good for all of us when we have a bigger group of people that every deal that comes up, you're like, look, I'll do the minimum, or I'll do 50, or I'll do 50 in every deal. I'll do 100 in every deal, or every other deal, because I don't like every deal you bring to me. That's so big because I then can go to these companies and say, look, we have a network of people. Every deal we do, we have at least $1 million that comes in. So then I can go to them when they have a situation like a Southern Silver at 13 cents. We want the maximum discount, or 12.5 cents. I think the maximum discount is 25% that they can mark it down from the market in Canada. So you just say, look, give us a good discount, 25% discount. We want it at 10 cents. And then this is where I negotiate on our behalf with the companies a bit. It's fair. I mean, they still get money at 15 cents later, which they're happy to take, and they're getting financing now. And then the big bonus for them is that then we're involved in, I'm going to cover the stock because obviously I approach them and we like it long term. Otherwise, I wouldn't have even done the deal. I get dozens of deals a year. I don't think it's 100 a year, but it's a lot that I get sent my way, and I just say no thanks. I brush it off. The beautiful thing about this is I usually find these deals on my own, and then we have this weapon, this big benefit for all of us when I go, look, we want to take a position. But why are we going to go in the open market and buy 100 grand worth of stock? Why am I going to buy 100 grand worth of stock when I can get 100 grand worth of stock and the warrant? The company gets the cash. They're happy. We can buy more in the open market if we want for a trade or whatever, but it is so foolish not to do these placements. If you qualify, meaning you make 200 grand a year, you're worth $1 million. It doesn't matter how sophisticated you are in the market. You just need to know that this stuff is all risky. It's all speculative. It's very cyclical. It's very volatile, but you need to worry about that if you're playing in here anyway with your own brokerage account. It doesn't matter to me. I think what you need to know though is that you've got the lockup. You have that window of risk. There are times when, say, a stock will run up for 3 months. By the time the 4th month comes, it comes all the way back down, and you're like, I could have sold it if I would have bought it in the market. It happens occasionally, but it's still, you plant these seeds. Right now, I think from the last 2 years, myself and elite members, we have like 15, for me, I have 15 to 20 companies that I own warrants in. Okay. When this market explodes, and some of these will start to expire because some are only 3-year warrants, which I usually look for as a minimum. Occasionally we'll do 2, if it's really close to above the market. But I mean, do you know how many additional millions of dollars that I can make by just having the warrants? Look, if you believe in this area and you want an allocation in the gold, silver, precious metals, commodities, junior miners, and you have money, this is the way to go. Feel free to email me if you have questions. I'd love your comments on the video. And if you're interested in this Arcana deal, we have a unit at 20 cents. It's at 24 cents today in the market. It's a nice discount to market. More importantly, we have a 3-year full warrant at 30 cents a share, which means you get 1 for 1. If you put in 20K, you get 100,000 shares, 100,000 warrants, 4-month lockup. It's a fantastic deal, highly leveraged to silver. I sought them out to get this allocation. They did not contact me, which is the case with most of these deals that we do at the Gold Investment Letter. And that's it for today. I hope you have a good weekend and that this was helpful for some of you that were confused about private placements, what they are, what are warrants, and why should you consider them if you are a high net worth individual. Cheers.